Good morning, traders. It's 8:02 a.m. Chicago time, 9:02 Eastern on Thursday, the 11th of May, 2017. Thanks for joining me. Hope you had a great rest and are wide awake for today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Our boring routine, right? Doing the same thing every day in, day out, starting the day in the exact same way. Looking at market sentiment overall, where's the flow of capital? Is risk on or is risk off? And so far uh, in the session, risk looks like it is coming off, but only just slightly. Crude oil again leading the pack. It's trading at $48. Currently, it's up 67 cents, 1.44%. Followed by the Japanese yen, gold, and the US dollar. So that's all flight to safety. The treasuries are slightly down, just a tiny little bit. And then the Russell is the laggard today, um, down 6 points or negative 0.43%, followed by the Euro stocks, the Eurobond, and the Nasdaq, and then the S&P. The S&P is down 4.75 points. So overall, just money's moving out. And that's the way the market's shaping up. The news overnight, of course, the Central Bank of England met. The ECB's minutes show that there was a 7-1 vote to leave interest rates unchanged at 0.25%. One dissenter. And other than that, the inflation report, I guess I'll let you guys look at that. OPEC April monthly report maintains that 2017 global oil demand growth is at 1.27 million barrels per day, raises 2017 non-OPEC oil supply growth from 580,000 to 950,000. That's kind of snuck deep into the report. And then the initial jobless claims this morning came in at 236,000 versus 245,000. It's slightly better. Continuing claims 1.92 million versus 1.98 million, also slightly better. Also this morning we got US April PPI final demand month on month, slightly higher 0.5 versus 0.2, actually doubling the expectation. Year on year at 2.5 versus 2.2, so PPI demand going up. Since that's pretty much what we've done overnight, looking at what's ahead. The calendar's all clear for economic releases until EI natural gas for the week of May 5th, expecting 55. And as far as speakers, uh, all speakers have already done their speaking. We had at 6:25 a.m. Eastern Time, we had Fed Speaker Dudley in Mumbai, and at 7:30 this morning, BOE's Carney speaks about the inflation report as a follow-up to the release of the interest rate stance. Today, you might want to note if you're in the Treasury market and it's moving around, um, we get a 1 o'clock new 30-year bond offering, maturity of May 15th, 2047. For 15 billion. So if you're watching the knob spread or if you're trading bonds, you want to pay attention to 1 o'clock p.m. Eastern time today. That is 6 p.m. Uh, uh, UK time. Anyway, let's move on to let's move on to what we expected yesterday. Yesterday, I was looking for a couple of key tests for an indication as to what the market stance is. The primary hypothesis was for an open auction. We're opening at the lower end of the prior day's trading. Note that the prior day had a very weak high. A lot of trades went off at that 2400 even, and the market's opening right at the lower end of where we finished the day on Tuesday. So the main test I was looking for yesterday was at 93. 93, expected failure at 93. Failure at 93 would give the opportunity to get short to get short into the 2387.50, the primary target, and then the extended target of 2384 even. That's so this hypo was looking for a downdraft and a pullback to the MC point of control. The secondary hypothesis was for an early test to an open auction that tests lower, finds bids, finds buyers, tests the 93, pulls back because again we expected 93 to be initial resistance. As I said, I'm looking to sell 93 on the first test. And then once it breaks through, look for a pullback, and it's an updraft, and we're looking for a retest of 2400 with a target of 2401.50, if you recall from yesterday's video. This is what actually happened. Here we open in an open auction. We finally test that 23.93. We push through by a tick just to make sure everybody gets filled. And so now we're working hypo 1, right? So here we're looking for hypo 1. We're looking for a push, pull back to mid, push to 28.70.50, pull back to the OS low, push extended target with the runner at 23.84. And basically looking for about 9-point range on the day. Guess what? That did not happen. What we got is hypo 1 up to this point, and once it breaks through and gets above the mid, then we have to move into a neutral stance and see what the next move is. And so the next move then becomes hypo 2, right? So once we do this right here, we see that a retest, so it pushes to 93 again. So we get to 93 and a quarter, pushes to 93. Remember 93, 93, 93. And once it pushes through, we're looking for a retest of 93, and we're looking for a continuation to 2400. Didn't quite get that either. So hypo 2, half-assed, same as hypo 1. However, hypo 2 did not give an opportunity to really get long, at least for me, until somewhere near the close. So near the close, we get this opportunity where the market's pulling back to IB high. The key low volume node of the day right here at 93 and a quarter. The VWAP, the mid, and the OS high. So you can see this area here cluttered with lines right there. This is the only opportunity I saw to take the long. By then, it's the closing range, and it's risky to hold on or defy the move down. However, it did have enough confluence in there to take a stab, at least with a light load, and look for the market to continue to break higher. Okay, so that's the synopsis of yesterday. Yesterday was an inside day. The dark green line is the prior day's low. The dark green line up top is the prior day's high. And overall, the market traded a little bit above. Notice that the prior day, the profile is absolutely saying nothing. It's the profile of the prior day of Tuesday is saying we tested a lot of prices all throughout the range. We traded a lot across the entire range. There was no consensus on value. Yesterday, we have a double distribution profile, which is nice to have because it gives us a distinct area. Again, 93, 93, 93, playing again 93 on the based on yesterday's double distribution. We're currently trading at 23.91. So guess what I'm expecting? I'm expecting 23.93 again to retest. I'm looking to sell that again. Now we have even more structure. We had good structure of the 93 from the prior day, right? It's all the way up here. And now we have even more structure with this LVN and a clearly defined risk level at 23.95. If it pushes through, if we're short and it pushes through the 23.93 and makes it to 23.95, you're in this jet wash, you're in this balance zone. You are wrong on this trade. It's time to exit and let the market decide what its next move is. This is why I love double distribution days. The following day gives us some distinct
risk reward areas based on the low volume node and the high volume node. I cover a lot of that in webinar 2 on my website, just classic market auction behavior. Okay, so that's where we are. Just to keep our perspective on the big picture, here's what we've done for the week. Again, we consolidated throughout February and April. We broke out at the end of April to the upside. We left a gap zone below, two gap zones below. We have consolidated in this area for 2 weeks, right? And then we finally, and I kept saying, hey, this is likely to break, this is likely to break. And we finally break, and guess what? We are back in balance. Monday's gold, Tuesday's purple, Wednesday is red, okay? And you can see that Monday had a range, Tuesday had a range all the way throughout the Monday's range throughout the profile. Then Wednesday is testing the entire range again. It's an inside day, it's compressing. But what we have is complete balance, complete consolidation. So we have good volume because there's a lot of balance here. There's a lot of value being seen at these prices. So we're getting good volume, but we're not getting any range really to speak of, right? So this is what we've accomplished. We keep moving the balance higher and higher. We have a point of control above a point of control. So we have high compression here, and we've finally broken up above, and we're just sitting sideways in balance again. The market is just tiptoeing its way higher. It's making, what this is saying is, yes, it likes higher prices. It sees better prices in the future because the market is a mechanism that doesn't price today's value. The market prices what? The future anticipated value of the underlying commodity. So the underlying 500 stocks or whatever, we're pricing them in today for tomorrow because we want to make our money. We want to place our bet today for what's going to happen tomorrow. So the market's still pricing higher prices, but it's making a tremendous effort to do so. It is really fighting hard to do so. It's sort of a there's a lot of resistance on the way up. So the participation is not that great despite the volume that is shown. So I wanted to show you that for a minute. Actually, the overnight session, again, pretty compressed. The volume is within what we would consider to be normal at about 145,000. It shows 143,000 for last night. Traded in the upper range and then just fell through. Most of the European session was fairly quiet, and then it finally fell through at about 6 o'clock this morning, and has been holding below mid, below the LVN. Um, the overnight LVN, and has traded a whole lot at this 2389.50. The market seems to be having a struggle keeping prices higher. And so the primary hypothesis today is going to look incredibly familiar. In fact, it's going to look pretty much exactly like this. We have another day where the primary hypothesis looks exactly like the prior day. So as I expand this range here, guess what I'm expecting? I'm expecting, again, just like we opened yesterday. Here's the open, the dotted green line, the little green dots. That's where we opened the prior day. That's where we opened in the prior session. We're opening pretty much against those. Open auction. Okay, we're in the lower range. Looking for a test of the 92.50, 93. Looking for resistance. Looking for a failed attempt at the 93 again. Look for a short there. Test down into, if it even gets there, test down into the prior day's low, test at 2387.50, and the extended target is 2384. Again, we're just looking for 9 points. Please, market, give us 9 points. That's all we're looking for here. So I'm looking for this test. Okay, I'm looking for a lot of liquidity in that area. I'm looking for big red dots on my S5 bookmap. As it retests, I'm looking for failure. I'm looking to join the bid, to join the selling by hitting the bid, and then looking for the prior day's low, which is likely to give us a quick flush beneath this 2389 level into 2387.50. And once we get that, it's likely to try to test back into the range and continue. The caveat with this plan, and this is hypo 1 here, the caveat with this plan is we have continuously pushed higher right after pushing down, push higher after pushing down, push down, immediately push up, push down, immediately push up. So I would not overstay below 2387.50. You need to be on your toes and look for a what looks almost like an inverted head and shoulder pattern, an attempt at the low. So an impulse pullback continuation, and then an attempt at the low that fails, and then you have a corrective move, and that's probably the end of that. So I'm not expecting too much there. Again, just like yesterday, open auction. Look for an attempt down early to complete yesterday's auction, and then look for failure to maintain lower prices for the auction to continue lower, and then push through to 93, pull back at 93, and then start to move towards 23.95 for a grand total of about 6 points of range today to the upside. The range to the upside has not been so great. Although yesterday was kind of defiant, it's generally moving better to the downside. But that's the secondary hypothesis for today. Okay, I know it's a lot of detail that I'm covering here, but I want to make sure that it all kind of fits together, that I'm not giving you these fragments of information and having you struggle or come to me to buy something to figure out what that is. I want to make sure that this all makes sense to you, and not so that you can trade my plan, but so that you can integrate that into your plan or test your plan or get stronger about your plan because you're refuting what I'm telling you as ridiculous or whatever. You ultimately have to trade your own plan, okay? Good luck today, and I'll catch you tomorrow. Hopefully you're picking something up every time you watch these videos. Stage 5 traders, we have our AMA this afternoon. We're going to discuss some specific topics. Your invitation was sent out yesterday. Good luck. Take care.